Good morning, everyone. Depending on where you are, good afternoon. And thank you, Luwiza. So understanding how credit scores work can give you a better picture of your financial well-being. So the first thing that I'm going to start talking about is what is a credit score? A credit score is basically what a lender uses to determine your payment habits. It will tell the lender your payment history. It'll give them an idea of how often do you pay your credits, do you pay your credits on time. And a credit score is also known as a FICO score, and it's a number that ranges from 300 to 850. On the right of my slide, I've outlined the ranges of credit scores. So you can kind of see what it means to have an excellent credit score. If you have a score from 781 to 850, that's considered an excellent score. 601 to 660, that's fair, and below 500 is bad credit. To the left of the slide, I've outlined 5 major factors that are so important that impact your credit score. The first one is your payment history, paying your bills on time. The lender's gonna look, how often does this person pay? Does this person pay their bills on time? The second thing will be the level of your credit utilization. Are you always using your credit cards all the time? The third one is the age of your credit. Is it 2 years, 3 years? How long have you had this credit card, or how long have you had this car loan? And then the fourth thing is the diversity of your credit. That holds 10%. What kind of debt do you have? You have your car loans, you have your credit cards, you have your revolving debts, you have your store credits. And then the last one is 10% of that is the number of credit inquiries. How often are people pulling your credit? So all those factors put together is what determines what your credit score is going to be. The next thing that I wanted to sort of talk about was understanding credit utilization. Because this is also one of the factors that impacts your credit score. You have to keep your credit utilization ratio below 30% to maintain a good or excellent credit score. So for example, if you have a credit card that has, or a store credit that has $1,000 limit, you should only owe below 300, so that can help you maintain a good credit score. If you're going to spend more than $500, if you're able to pay it off at the end of the month, then pay it off. If not, I've just given you at the bottom of my slide, I have some tips of how you can improve that, how you can improve your credit utilization. The first part is pay down your debts. If you're able to pay it off, pay it off. If not, just pay off more than your minimum payment. And then the next thing is increase your credit limit. If you have a credit limit, let's say some lenders or even credit card companies, if you give them a call and say, look, my credit limit is $8,000, can you see if you can increase that to $10,000? That's something that they can do for you, and that will help you with increasing your credit score. Another thing is when you pay off your cards, keep them open. Do not close them, because when you close your cards, it drops your credit score. If you know that if you're the type of person that says, well, I have this credit card and it has like a $5,000 limit on it, I'm gonna go spending, cut the card, but just don't close that account. Now let's talk about the 5 things that you need to know about your credit score. Number 1, purchases. If you have poor credit, it's gonna make it difficult for you to get a loan. So the higher your credit score, the lower your interest rate. Secondly, interest rate. If you've got a high credit score, it's going to mean that you're going to get a lower interest rate. It will help you on the credit cards. It will help you on the mortgage loans that you apply for. It will help you on getting a good rate on your car loan. And also good credit will also help you when you're trying to shop around for car insurance. Even mortgage insurance, they look at your credit as well. They look at your credit. If you're going to rent a house, if you're going to rent an apartment, they will look at credit as well. If you've moved into an apartment, you're trying to maybe turn on some utilities, they pull your credit when it comes to that as well. The third thing is your dream job. Companies nowadays pull your credit report, and that kind of gives them an idea of your character. It shows them your spending habits. I know in the financial sector, they pull your credit just to see, how disciplined you are. So if you have credit issues, sometimes that can jeopardize your dream job. Saving money. The higher your credit score, the lower your interest rate. And that means that you're going to have a lower monthly payment. And if you have bad credit, then that's going to be vice versa. You're going to have a higher interest rate and your monthly payment is going to be higher. Paying your bills on time. Wow, that one is so important. And it's one of the fastest ways for you to mess up your credit is if you pay your bills late. If you pay your bills, let's say your credit card is due on the 15th and then you don't pay it until the 16th of the next month, that makes it 31 days late. And what happens with that is the creditor is going to report to the credit bureau that you're late. And when that happens, that goes on your credit report. And it can take up to 7 years for that to be taken off. So you don't want to be late on your bills. If you can't pay more, just pay the minimum payment. But the bottom line is you have to pay your bills on time. Don't allow medical bills to go into collection. I know a lot of people see a medical bill come through the mail and they're like, oh, it's just a medical bill. Those can become enemies. You want to pay those on time. You can call your doctor's office or whoever it is that's sending you to the hospital. Make some sort of a payment plan with them because you just don't want to ignore those bills. When they show up as a collection, they're very difficult to take off. They will stay on your credit report. They will affect your credit score. And you don't want that to happen. So you always just want to pay your bills on time. I've seen situations where, we're in the process of maybe approving somebody on a loan, and mortgage companies nowadays will pull your credit at the beginning when you put in an application, and they'll also pull your credit maybe 2 or 3 days before closing. So if you didn't pay your credit card and then it's now reported to the credit bureau that you're 31 days late or 32 days late, that's going to drop your score. If we pull the credit and we find that you have a late score, that might affect your interest rate, and sometimes that may cause your loan to be denied, and then you end up not even moving into the house, your dream house that you wanted to move into. So I cannot emphasize enough: pay your bills on time. It is so important. Some people may say, well, maybe I forgot, and I get that a lot from customers who say, well, I didn't remember. If you can, credit card companies now send you alerts. You can even have them send you an alert on your phone way to say, hey, your credit card bill is due in 5 days, or they can send you an email. Now, during these times that we're in, you may be asking yourself, well, that's great. It's always a good idea to pay your bills on time or having good credit, but what do I need to do to protect my credit during this COVID-19 pandemic? First thing, pay your bills, pay the bills on time, pay as much as you can. I understand that times are hard right now, but even if it means you just paying your minimum payment, pay it. Secondly, contact your lenders. Credit card companies now, with everything that's going on, are willing to reduce your interest rate, maybe even up to 12 months. You can call them and just say, look, if you have 3 or 4 credit cards, tell them, look, this is what's going on. Can you just work with me? Suspend my interest for 12 months, and then you make as little payment as you can, just so that you can avoid the late payments showing up on your credit report. Check your credit reports. Right now is the time to check your credit. Everybody is entitled to a free annual credit report every year. And that's, at the end of this slide, I've actually put a resource that you can go to be able to get your credit report. It's so important to know what's on your credit report. And then when you're trying to apply for a loan, you don't want any surprises. So it's important for you to look and know exactly what's on there. And if there's any discrepancies, it'll give you an opportunity to be able to dispute those discrepancies. So once you check your credit report, look at inquiries, look at credit accounts that are open that maybe you may not be aware of. And if you see anything that's on there that you're not aware of, you could dispute them. Experian.com does have that service where you can go in and dispute, and then they'll go ahead and follow up and find out who did that. And if it's not yours, then they'll take it off. And then the other thing you could do is you can also contact your service providers. So if you're having difficulties with the pandemic, give your utility company a call. You can call your electrical company, your cell phone company. You're just trying to avoid to get all those bills to go into your collections, and they will work out payment arrangements with you. Identity protection. Whenever you have a crisis going on in the economy, it always somehow raises fraud and identity theft. So one of the things that I can suggest is you could freeze your credit. It's free. You can call any of the 3 credit bureaus, have them freeze, and that way it just prevents from people going out there, stealing your identity, opening credit cards that you're not aware of, or opening up loans that you're not aware of. And then maybe about after a year or so, you can unfreeze it, but there's no charge for doing that. All that is free. And then the final thing I was going to talk about as far as the pandemic is the CARES Act has put in some programs to help people with being able to protect their credit during this time. So in conclusion, I'm going to say it again, pay your bills on time. And if you pay your bills on time, and if you don't max out your credit cards and you don't apply for new credit too frequently, your credit score will be higher. Student loans, while they may not have an immediate impact on your credit score, they can be a hindrance in trying to secure an FHA loan, which is a government loan when you're trying to purchase a house. And just like Mr. Mwanza said, I mean, if you're able to avoid student loans, I think that's the best thing to do. And then inquiries. That's one thing that if you're looking for a house or if you're trying to buy an auto loan, if you go, you have about 45, I'll say 14 to 45 days for your credit to not be affected as you shop around. So you can shop around and look for the best rates. But after that, after about 45 days, I wouldn't have too many people pulling your credit. And then at the bottom, I've put in some helpful resources. If you go to annualcreditreport.com, that's where you can get a free credit report. And today, I would like to challenge those of us who have not pulled our credit, pull your credit. It's free. And I think for like a little fee, you can also get your credit score. Pull it, look through your credit. If there's things that you don't understand or you don't know what they are, give the credit bureau a call. They'll definitely, love to talk to you. You can just send them an email. Experian.com also has great resources about the CARES Act and the things that you could do to protect your credit during this pandemic. But in summary, all I can say is, just pay your bills on time. If anybody is on the call that doesn't have good credit or doesn't have credit at all, one of the best things that you could do is you can go to Capital One and apply for a credit card. Try to use that credit card if it's just your first time that you're doing this, if there's a millennial on the phone or somebody who's older that doesn't know anything about, credit or wants to build credit. Capital One is great with that. You can open an account with them or even Discover. I believe Discover has really good credit cards for students. Use it. I would say you could use it every month, but just make sure at the end of the month you pay it off. That way it helps build your credit. That's it. That's all I have to say. Thank you.